Hey, what's up, my friends? Welcome back to the YouTube channel. This is the weekly analysis video that gives analysis on to expect in the coming week and gives you an idea of what happened in the past. This is a SignalNet channel, so if this is your first time, welcome. Let's get right into looking what to expect. Today is the 16th of July 2023. Now, last week, I'm going to go through about 4 or 5 pairs, but the focus of the pairs that I look at for now is the pound USD and the euro USD. So that's where I'm going to focus. Then I'll look at a few other pairs just to give you an idea of some other areas I'll be looking at. So now for the pound USD, last week it rallied most of the time. Let me use this. Now I'm going to show you something that just happened. Something just changed in the market that was not so. So ensure you look at this video, take your time. If you're doing something else, just drop it first and focus on just give us a few minutes to give you an idea. Now, if we go to the monthly chart, we go to the monthly chart. Okay, let me remove some of this stuff on the chart so that we don't get confused, to just give some clarity. This is how the monthly chart looks like. There was a high, came all the way down, and went up. So all this while, the 61 level has been holding. So what we have been seeing is a kind of like range between the 50 level, in fact, between the 38 level to about the 61 level. It hits it, pulls back, goes to the 50. So it has been kind of going sideways. But just this last 2 weeks, it actually has clearly broke above the 61.8 level. So this kind of like begins to change everything, because so far, my thinking so far has been that this pullback, this drop down we had so far on the monthly chart, with this movement up was just like a pullback and it was going to turn right back down. But with this current movement breaking the 61 level, I'm no longer sure about that. Now, and especially what triggered this major buy. The news that triggered this major buy was the CPI news that came out last week. And there's a fundamental breakdown that you can research on it. But people are calling, fundamental analysis are calling, forex traders are calling that this may be the beginning of a major buy. That's a major crash against the US dollar. Meaning that it's possible that we may, instead of that turnaround I was expecting, that we may actually have it buy all the way up. Now, if we look at Euro USD on the month, Euro USD also, we have a similar thing that happened on the Euro USD. So far, Euro USD and the monthly chart has been going sideways. Let me also put, I think I already have a chart like that. Okay, this one. So this is like the monthly chart on Euro USD also. I drew from this level and I also drew from this level. So that's why you have like two. So now, looking at that, you see that so far this one, Euro USD has actually been going sideways monthly, since about January this year. So it has been bouncing from the 50 back to the 38, back to the 50, back to the around the 38, just like that. But as you can see, this is the first time it's actually getting to the 61.8 level. It hasn't, gone above it for the Euro USD, but it has gotten to it. And now it has gotten to it for the first time, and it's quite bullish, and we have pound USD crossing it. Now, it seems both of them are still around. It is very possible, yes, we may still have that turnaround. But if that's going to happen, that's probably going to have to happen very soon. If not, we may actually be in a monthly bullish trend and we go all the way up. So with that thinking, for now, I think I'm going to be watching Euro USD closely. And I think for now, even pound USD, I think my bias on the two pairs is going to be bullish. Now, despite all of that, on the weekly chart, let's look at what's happening on the weekly chart. For pound USD on the weekly chart, you can see what just happened. This is quite bullish. We had a doji, a confirmation then a breakout buy. You get, so it's really quite bullish on these pairs. You can see that really quite bullish on these pairs. This move that broke out, this last week move, it was really quite bullish on it. So I'm going to be looking at being bullish on it till further notice. That's the pound USD until we see a reason to turn around. Okay, for Euro USD, let's look at the weekly also. You can see what happened that week. You can see the breakout that happened this last week. It was really major. And all of this started after that news was announced for the CPI. You get, there's a fundamental breakdown, like I said earlier, but look at it. You can research on that. I don't want to go into fundamental analysis. I'm looking at technical analysis in this analysis. So let's go to daily now. If we look at daily, you can see Euro USD bought throughout last week. Every day buy, 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 buy. Even on Friday, I was expecting that it will end as a sell. It still ended as just a doji buy. Even though it pulled down a little bit. Yeah, pound USD on daily on Friday sold, but it has been buying, 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 buying. So in my thoughts, I am for this particular scenario, I'll be looking at probably maybe a little bit of pullback, then I follow it in a buy even further. That's what I'm going to be looking at. But I'm going to watch that quite carefully. One just like a heads up on what you could look at. If you draw Fibonacci from, let's say on Monday, it doesn't just make a new high, it continues to decline. If you draw a Fibonacci from the current high, so you put it something like this, so you can see that it hasn't even fallen down to the 23.6 level, which usually if you're going to have a pullback, at least it should get there. So if on Monday it just turns around and makes a new high, then that will be that. That means it's still pulling up, no clear opportunity to enter yet. But if it begins to pull back, this 23 will be like a first target, then we'll have the 38. So if it pulls back all the way here, this may be a good place to start taking buys, the 38 level, maybe putting your stop loss just below the 61.8 level, just a little bit below it. So that could be a way to play it out. You could actually use the same strategy on Euro USD too, and wait for the pullbacks. Wait for the pullback. In fact, you could even sell on Euro USD using the current high as like a stop loss, but that will be a very tight stop loss. I think it's just about 10 pips or so, and then see if it can pull back all the way to the 23.8 level. That should be a nice RR. Even though you'll be going against the trade, there's a good chance you could lose that, but that could also be a nice trade that you could make some profit on since the stop loss is very tight there. But for me, I'll be looking at waiting for some kind of pullback, then maybe I start buying from the 38.2 level, the 50 level. I'll just follow it like that. Now, for the next pair I'm looking at is the same idea I'm looking at, which is the SP 500. Yeah, I have a lot of lines on it. But basically, let me just, should I delete all of this? Okay, fine. Let me just delete all of this for your sake and just quickly show you what I'm looking at on them. To delete all your lines like that, you just need to right click, go to object list. Well, there's no object list right now showing because there's no line on it. I already deleted everything. But if there was a line, when you right click, okay, let me put a line and just show you that. When you right click, put a line. Okay. So now if I go to the chart and right click, you can see object list is back. So Control B also brings it back. So when I click on that, it brings out the list of all the lines I have on the chart. So you can just delete, and it's delete everything for you. Okay, so that's for that. So for SP500, I intend just the same way I traded this one going up. I waited for some pullback, then started buying it. That was how I traded that. I intend to do exactly the same thing, which is use just draw Fibonacci up to the current high. Wait for it to pull back, maybe the 38 level. Put my stop loss just below the 61.8. Then start expecting buys. As it pulls down, I take buy maybe one at the 38, one at the 50, one at 60. Just put my stop a little bit. Pulls back beyond that, I'm out of the trades and I keep watching it. Okay, so we'll see how that plays out. It has been buying for quite a while. I don't know what's going to happen in the future, whether it's going to just fall down. But I know that the trend is up, so I intend to just follow it that way simply. That's how you make money with these things. Just follow the trend. Okay, then another pair I'm looking at that may actually have an opportunity immediately when the market opens up is the USDCAD. I'm thinking that this may have an opportunity for sell. May have an opportunity for sell. I think that we're kind of having, it was going sideways so far, and I think somehow that sideways thing has kind of broken out and we're having some kind of trend downward, especially with that news and US dollar weakening. I think we're having a trend downward. Now, if the opportunity I'm looking at is actually on the daily. So you can see we had this move down like this, a pullback back to that level, a decline, then on Friday, like a pullback. I think that this pullback that we had here may actually be an opportunity to sell for the USD JPY. So if you put your Fibonacci just from here down to that level, you can see that it already got to the 38.2 level. So I'm thinking if one is to play this, you just put your stop loss just a little bit above the 61.8 level. Then immediately the market opens, take a sell. Gets to the 50, maybe take another one. Gets to the 61, maybe take another one. Just organize your risk around that. Then as it pulls back, you make some profit. Now it may not pull back immediately. It may go sideways for a while before finally coming down. But I think it's a trade with a potential opportunity. Monday could open and it pulls back up, and a lot of people get scared and maybe close out. But I think there's a chance it could pull back because clearly the trend is downward. Clearly the trend is downward for this. So we'll see how all of that plays out. Then lastly, the last pair I'm looking at is it's still kind of following the same logic as the USD JPY. I mean the USD CAD, which is the NZDUSD. I'm also thinking that for this pair, just like for the CAD, and that I'm looking at it selling, I think that this one has an opportunity to probably pull back a little bit, then you can take a buy. You understand? In fact, what I really have in mind, what I'm really thinking about this pair is that this move here is like a wave one, and this was like a wave two, and this like a wave three. So we will probably have like a wave four somewhere around here before it pull up. So that's what I'm thinking about this move in general. I'm thinking that we have like a wave one, wave two, wave three, wave four, even at the smaller level. I looked at it on 4 hours, and I think that kind of makes sense. I think we have wave one, wave two, wave three, wave four on the way. You get. Now, if you're thinking, okay, where could be a potential stop for this pair? From what I've seen, I think that if this high holds, let's say on Monday the market doesn't just go up and break it, I think the market could pull down to as much as 310, maybe even 300. You get. So if you're using a stop for your level, This is how far I'm looking at the market pulling. Let me just put a line there. The market could pull back, pull down all the way to around this level, around this zone. Let me color the horizontal line there. To 1 year. Yeah, so the market will pull down all the way to this zone, before bouncing up. I won't be expecting it to go much below this zone. However, if the market pulls to this zone, you could use this level as like stop. Maybe you could use about maybe 260, 250 as your stop loss. So it could potentially pull down to this zone. The reason why is this: for the wave one, if we're looking at it, the wave one actually had a deviation of about 55 pips. Wait a minute. Okay, so if wave one had a deviation of about 55 pips, then this should actually be your zone of your stop. You shouldn't even have your stop that low. Okay, I saw something about this before. Okay, it depends on how you're looking at it. If you're looking at it from the daily perspective, taking this as wave one and this move like this as your wave two, the deviation is about 100 pips. You understand? So you could actually have the market pull down all the way to this level before going up. However, if we're looking at from this low as wave one, wave two, wave three, that's in a shorter term. Then if we're looking at it that way, using H4, as using this as wave one, then this correction and this pull up, then on Monday you could actually have a tighter stop loss. You don't even need your stop loss to be that long, because from the top we'll be looking at a pullback of, let's say, about 50-60 pips. You get max. So if you're using a stop, maybe you could just add another 20 pips to that, and maybe your stop could be somewhere here. The stop could be somewhere here, maybe 30 something or so. That could just be your stop. Then you take a buy and expecting it to go right up. So you want some kind of pullback, enter in, then you take it, you buy so that it goes up. So you can use a tight stop loss, maybe 20-30 pips, targeting that they move up with another. So it's like a one-to-one trade. But that's when you're looking at it from 4 hours in the shorter term. You get. But if you're looking at it in the larger term, the pullback could actually. So what this means, this kind of trade it's a little bit complicated, but it's a trade that on Monday we could have it go right up and the opportunity is still there. That means you take a buy, it goes right up, you take profit, and it begins to pull back down, and you still have an opportunity to buy again. You get, but with a larger stop loss now. You understand? So that could be like a week of multiple opportunity on the same trade. So a shorter term with five wave is completed, but beginning an opportunity for a larger with 5 to form. That will take a longer time. Because if you look at this on the daily time frame, if I'm correct, and this is actually wave 2, this wave 2 took about 1 week to form. So if this wave 4, that could also take maybe about 1 week. Then it begins to buy. So in the short term, looking at it in the short term, because we have waves within waves. So wave 3 is also broken down into 5 waves because it's also an impulse. Anyway, what I'm saying right now is going over your head. Just don't worry about it. I'll advise maybe you enroll for personal mentorship so that one-on-one can break this down for you, and just guide you on it. But that's the idea anyway. So in the shorter term, yeah, we could have a 5 wave complete. That means as the week opens, we take buys and it pulls up, just like the USD can in shorter term take sells, and it pulls down and will make some money. While as the week proceeds, may still continue, now begin to pull down in that time frame, creating another opportunity for us in a larger time frame to buy. So um, if you don't understand what's happening, it may confuse you, and at the end of the day, you may be wondering that the market is just hunting my stop loss. But it may not be doing that. It may just be doing something in the short term, then also doing something in the larger term. So that's the beauty of the market, But the main thing is that when it's trending up, you know that the trend is okay, it's being bullish. So you look for opportunities to buy. So anyhow, you make money if you're following the trend. I hope that's okay. So if you have questions, please drop it in the comment section. If this video has been of benefit to you in any way, please like, subscribe, and give us a thumbs up and share with friends. I'll see you next week. Thanks for watching. Bye.